Hey all, good morning and welcome to ShareTreck. This is Raj here. Today I'm going to look at the CNBC headlines to begin with, as always. And I can see that the futures for most of the indices are red. And it's not just lightly red like minus 0.10 or something. It's in round figures, like NASDAQ is down 1%. And Dow is minus 0.78 and S&P futures is almost minus 1%. So I think the long-awaited turnaround has already come in. So I'm looking forward to deals. I won't be jumping immediately, but I think we have to watch certain counters. If you hadn't seen my video from yesterday, just check it out. I had spoken about selecting 3 out of the Mag 6 for future based on their valuations. And of course, I'm going to also come up with my outlook for genomics. Please watch out for that. That said, I think that we have to look at the indices. The NASDAQ futures is down 0.98%. And if I was to look at our indicators, Dow Jones is down 0.77% in the pre-market trading. And we have a kind of support line out here, which is around 41,736. And another support is somewhere out here, which is at around 42,325. So these are the 2 levels of support for NASDAQ. One point I would like to make out here is that you will see that the volumes were quite high for the drop that we saw in the previous business day as compared to the volumes that we saw for the way up, except for day 1. That was 20th of December. After that, the volumes had started dropping. So that's one aspect that I'd like to talk about. Then I have another one, which another data point that we used to refer to earlier, but of late we have not done that. The indicator that I'm talking about is the number of companies in S&P 500 above their 50-day moving average. And if you look at this out here, we have got only 25.64 companies above that 50-day average. And if you were to look at companies above that 20-day average, only 56.46. So you can see there's been a steep drop in broad support for the indices. So this also makes me feel that probably the correction that we were looking for has arrived. And let us have a look at the VIX. Market open VIX is going to be around 12.86, plus 12.86. So it's going up. And that's not a good sign overall. That said, those who are interested in CRISPR therapeutics and aiming to pick it up at a lower price, you will find that it is coming closer to as low as it has been in almost a year. And that level is around this green line of support out here. That is 38.68. Pre-market, we are already at 39.55. That is 1.17% below where we closed on Friday. So I think one has to watch CRISPR closely. There is still value into CRISPR. And I'm starting to have a bit of doubts about Illumina, because what I see out here is a potential head and shoulder pattern, and that is bearish. So probably we could see more of downside pressure for Illumina. The MACD is also bearish. Momentum is also weak. And pre-market, we already down 0.84%. Altimmune seems to be following a parallel bull channel, which is inferior to the one that it was on before. And today, pre-market, it's up 0.13%. MACD is improving, but momentum is not that great. We are very soon going to get squeezed into this wedge out here, and we have to break out either on the upside or the downside. And I think it's going to break out on the upside because we are on a bull channel. So that's what I am hoping for. Elsewhere, Tesla is beginning to fall out of the support line. Of course, the bullish support was very steep in my opinion, but you can see that for the first time we already dropped below, and today we are around this orange line, which is a drop of 2.5%. So I think I have some kind of a support for Tesla around, let me draw a line of support out here just to pinpoint where I think we have support. So let me mark this green, and you can see it clearly. A support at 418, and then another support somewhere out here, which is going to be at around 360. So these are the 2 supports that I see. And if I was to open up the moving averages, then you have a support at the 20-day exponential moving average, which is at 411.62. And then the support, which is at 360.19, is extremely strong because it is coinciding with the 50-day exponential moving average, which is this blue line out here, which is sitting at around 357.84. So that's what I'm looking forward to in case of Tesla. Next, we look at Palantir, which has fallen below its earlier bull channel, which has now become a resistance for it. It was supported by the 9-day exponential, and today it has fallen below the 9-day exponential in pre-market trade, and as a result of which it's down 3.35% this morning, and that takes it to 76.43. So the next support for it is going to be the 20-day exponential, which is sitting at 73.80. That's the next support for Palantir, in my opinion. And then I would like to take you to look at my shopping list from yesterday's video, where I was talking about Google, Meta, and Microsoft, 3 of these things being a target for me. And I had looked at the potential gain as against the current price. And I also look at the PE, 5-year average against the current PE. As the stock price falls, the PE improves. And therefore, the difference between the 5-year average PE and the current PE is going to drop, and I think Google becomes even more attractive. So the current stock price for Google was 194.04, whereas if I was to look at it today in the pre-market trades, it's at 191.02. So if it goes to 191.02, we are seeing $3 being shaved off from the current price. That makes it even more attractive. And if I was to look at Meta, for example, Meta is down to 590.65 this morning in pre-market trade. 590.65 is around $9 less than where it was on Friday. So that's also again a steep discount. So things are starting to get better. So I don't have to jump in immediately, but I can see that Google becomes much more attainable and less risky, and Meta is following suit. And now let us look at Microsoft. Microsoft this morning in the pre-market trades is down 1.11%, and it's at 425.77, whereas we had it at 430.53. So that's almost $3 down. So overall, I think the PE is going to continue improving as compared to the 5-year average. And I think in terms of potential gain, we are going to look at higher potential gain given the target stock price that we have worked out. So overall, I'm very happy with the direction that it is going. And I don't think everybody is going to be happy with this, because most people are more tuned towards buying and seeing the market go up. But the real way to make money for a retail investor is to buy low and sell high, which means that you don't stay in the market for too long. You start selling off on an ongoing basis as the market keeps going up, then collect all the cash. And when the market drops down, you watch for it and start dollar cost averaging when it has dropped a little bit, and you start having a feeling that the market might go up again, and you buy in nibbles so that your dollar cost average is much lower. And then when you come closer to the top, you sell. Of course, this means that you're not going to make 100% of the profit, but still it's foolish to believe that you can time the market and sell it exactly at the top and buy it exactly at the bottom. That seldom happens, and that's why many people end up with a loss. So for the new year, I'm going to start a new portfolio. I'm going to start with a new capital amount, and I will show that to the channel, and I'll be doing trades on it, and you'll see how I'm trading, and we'll see at the end of the year what I managed to do. And I'd like you guys also to participate in giving me advice on what to buy, when to buy in that portfolio. With that, my friends, I'd like to bring this video to an end. I think as the market goes down, real retail investors should rejoice, because you now have an opportunity to buy really good stocks at the cheap and ride it to the next high. Well, friends, that brings me to an end of the video. See you later. Bye for now.